Hello and welcome to FinTech Impact. I'm your host, Jason Pereira. Today on the show, I have Daniel Alfi, CEO and co-founder of Fifr. Fifr is an online platform that basically tries to combine investing, financial wellness, personal money automations, and advice in general into one comprehensive package for its customers. And with that, here's my interview with Daniel. Daniel, thanks for taking time today.
Thank you, Jason, for having me.
So Daniel Alfi of Fifr, tell us about Fifr.
Thanks, Jason. Fifr is a financial wellness platform designed for tech workers and high-income earners. We combine best-in-class technology and real human experts to build, optimize, and automatically execute on your financial plan.
Okay, we're going to dive into that market and the choice around that in a minute, but let's talk about the history. How did it come to be?
Yeah, so my origin story into Fifr goes back to when I got into Penn, which was for undergrad. It was my dream school. I was studying computer science and finance as part of a dual degree program, and I was thrilled to get in, particularly because I was on an almost full financial aid-based scholarship. Then, halfway through my freshman year, out of nowhere, I received an email from the financial aid office saying that they were revoking almost all of my aid. I ended up graduating with about $250,000 in 9% student loan debt, even though I packed in classes to graduate early. On top of that, I had some big dreams. I wanted to start a company with my best friend. It became obvious to me that I wanted to get out of debt as quickly as possible to reach my version of financial freedom, which is starting a company without putting the rest of my life on hold. And so that's what I did. I locked in, I read all of the personal finance literature that I can get my hands on, and then ended up building this optimized, nerdy personal finance system. I learned how to refinance my student loans. I learned how to budget, how to save, how to invest, where all the tax advantages were, and what benefits to choose during enrollment season at my company. And because of that, at Morgan Stanley, where I was at my first investment banking job, I became sort of the local celebrity for personal finance. I was thrilled to share what I learned, and I started doing these lunch and learns that grew from analysts to associates and grew bigger and bigger. But it was really interesting. One thing that I noticed was that people were really excited about my topics and about saving money. But then I'd check in with my students about a month later, and I'd noticed that people hadn't taken any action most of the time on any of the advice that I've given them. And I'd ask them why, and they'd say something like, slipped my mind, or I forgot, or I got busy. And I noted that and thought that for normal people who aren't big personal finance nerds like me, life gets in the way and it's annoying to log into all of your bank accounts every month and move money around, even if you're already convinced that it helps you in the long run. And so that really stuck. After Morgan Stanley,
Yeah, one of the value propositions around advice is simply just the nagging, quite honestly.
oh, absolutely. Yep. And people are very thankful at Pfeiffer when I chat them and nag them, and they're annoyed, but then they're happy about it.
Well, it's not going to get done otherwise.
Absolutely. Thank you. So after Morgan Stanley, I moved to Iconic Capital, which is a venture capital and growth equity firm. And I was part of the investment team that spent a lot of time in consumer fintech. I was specifically part of the deal team that led investments into companies like Robinhood on the brokerage side and Chime on the digital banking side. And I really loved both of their missions to democratize financial products for everyday Americans. And at the same time, from my seat as an investor, I was looking for a company that would solve the problem that I was passionate about in terms of helping young people automate good financial habits. And I couldn't really find any company that was doing that. And then a couple of years ago, I noticed two big shifts happening in the tech world. One was the rise of better fintech infrastructure. You have your aggregators and fintech APIs like Plaid and Duala that made account aggregation more reliable and made money movement way more seamless and inexpensive. And then two, of course, the explosion of AI and what that means for the financial advisory industry. From my perspective, I thought that for a lot of the financial advisors that didn't have client outcomes in mind, the writing was on the wall for them, and that good advice and execution was about to become much more unbiased, more real time, and more affordable, which is what led to the Pfeiffer journey.
All right. So it's interesting because advisors are often threatened by the existence of online platforms and robos, but in the end, it's a different value proposition. And the only ones who should be fearful are those who basically don't provide any value beyond just simply pointing at investments. So let's talk about the market you're at. First off, when you originally launched, What was the vision for what you wanted to put together?
Yeah, when we were originally launched, it was a combination of automated money movement and AI-based financial advice for everyone. And we wanted to democratize good financial habits for everyone.
Okay. So that's a mission. Talk to me about your execution. Like, what was the original thought on the platform and how you would do that?
Yeah. And so the original thought was that we would build the plane as we were scaling it. And 2 years ago, what we did, I started with 0 customers in the state of Tennessee. We were just a state registered investment advisor. And what we wanted to do is start the process of actually building an RIA and serving clients that would take us on, that sort of matched our ethos, long term investing, using low cost index funds and automating the execution of all of the tax advantages that we can muster. Because we had this vision of democratizing money movement, execution, and financial advice for everyone. But we had this idea in our head, and we wanted to make sure that when the rubber hits the road and we were dealing with actual people, they would be comfortable with our process and that we would learn along the way as we were building our product and automations.
Okay. So let's talk about the experience. I'm a user. I come on board. What does it look like? What is happening from start to finish?
Yeah, so today, the process of signing up for Pfeiffer looks like this. First, very importantly, we have a fit meeting. And that's just a quick call to make sure that we're aligned on how we work together, that you agree with our long term investment philosophy and our automation first approach. Then, of course, we'll move forward if it's a mutual fit. And then the next step is what we call onboarding, where you link all of your accounts, your bank accounts, checking accounts, savings, brokerage, equity compensation accounts, credit cards, everything through the Pfeiffer app that we built. You also open investment accounts through our RIA custodian partner Altruist and share with us all of your goals, whether you want to buy a home, save up for a vacation, whatever matters to you. Then we do that asynchronously. Then we have the live onboarding call, which usually lasts about 1 to 2 hours. And by the end of that call, we're looking to accomplish two main things. First, we give your finances a full review. We clarify your goals, we invest your excess cash, we adjust your 401k, we move money into higher yielding savings accounts if that's relevant. Basically, we get everything optimized for that point in time and where you are today. But then, more importantly, we set up your automations. So from that point on, Pfeiffer manages and monitors your finances in real time. So when something changes, say you get a bonus, we'll reach out to you with a specific recommendation. So for example, we'll reach out with a message that says, "Hey Jason, we noticed you got $15,000 in extra cash. Do you want us to do your backdoor Roth IRA for you and then move the rest into a brokerage account?" And if you say or click yes, we'll handle the rest for you and post a screenshot confirmation when we're done with it. And then you get unlimited access to us in what we call maintenance mode to chat with your financial wellness expert whenever you have any questions or want to make changes to your plan. And we'll send you a quarterly video update and we'll meet with you once a year.
So basically, the fit meeting is interesting on the digital side because most people don't do that sort of thing. It's simply serve like basically self-service. So the entire fit meeting thing is unusual on a digital platform altogether because it's typically a self-service platform that people intend to do. So talk to me about why that was important to include in your platform.
Yeah, absolutely. So today we're not quite yet a self-service platform. We're still a more traditional sort of tech-enabled RIA financial wellness expert member relationship. The fit meeting is incredibly important because we make investment decisions or on behalf of our members and we want to make sure that they're aligned. And two, I think we realized that there is a group of people with a certain ethos already that agree with our investment philosophy. And then there are a group of people that that may not align well, either from an age perspective or from a risk tolerance perspective, or just being too uncomfortable with technology and automation, that we wanted to make sure that we're all on the same page from the get go. And we do provide unlimited chat advice after that. And so we just want to make sure that we don't have a small subset of our members taking an outsized portion of our financial wellness expert time.
Okay, fair enough. Smart. Limiting the amount of poor fits is highly advisable. All
Yes.
right. Now I want to circle back to what you said about high income earners and people in tech. How did that come about? Was that originally targeted, or was that just you finding your natural audience essentially?
Yeah, absolutely. So it wasn't originally targeted. And when we last spoke, actually, Jason, what it said on our website and what we went after at the beginning of our mission was trying to be everything for everybody. And we realized through trial and error that was a really bad idea. First of all, we're not a self-serve platform yet. We're a tech-enabled RIA, as I just mentioned. And our price point is way more affordable than most traditional financial advisors, but it is still relevant for people that are high income earners first. Of course, we want to build out the technology and the self-serve version of it to eventually continue to get the price down. But for now, we want to target tech workers primarily for two reasons. One, they're less resistant to trying new technologies and they give great feedback. And two, like my whole career is in tech, and I've had a lot of experience both for private tech startups analyzing ISOs and NSOs and how to think about tax optimizing options and private equity. And then for public tech companies, there's usually a lot of very, very juicy tax optimizations on the benefit side with mega backdoor Roths. And so there's usually just a lot of fit and value creation there. And then, as I mentioned on the income side, that's really hyper targeting to get our first group of users that are really going to help us build something cool in the long run.
Very cool. Very good. All right. So basically, I'm going to a couple of things to point out on your website I want to discuss as well. So in particular, you have a section that's a call out to businesses. So you're selling into 401k plans, or what are you doing?
No, not selling into 401k plans, but a lot of solo entrepreneurs are coming to Fiverr because they usually also have a massive bench of tax advantages that they previously haven't been taken advantage of. And so we get a lot of people who are like consultants or have built a solo tech company. What's really cool about that is I'm a big personal finance nerd, as one of my favorite things ever is the mega backdoor Roth 401k. And just the power of compounding into that and the tax savings that you get from that when you're young is so crucial and impactful. And that's usually only available to people who work at companies that have a 401k plan that allows for stuff like that. But if you're a solo business owner, you're probably focused on growing your business and not necessarily focused on tax advantages available to you. And there could be many. We have actually added tax licensed tax professionals on staff since we spoke last. So we can actually file your tax returns and have everything under one roof, both on the tax side and the personal finance side, which is new for us. And so we can also discuss things like, hey, should you be an S Corp instead of an LLC? And will that help you from a tax perspective? And then getting back to the mega backdoor Roth point, you could basically create your own mega backdoor Roth through a solo 401k that Altruist makes it very easy for us to open for our solo entrepreneurs.
Excellent. So you need me to the punch on the tax piece because it's something else you heavily focus on. So talk to me about basically what you built there or partnered there on in order to basically make that happen.
Yeah, absolutely. And it's really interesting because we weren't focused on tax to begin with at all as we were rapidly growing our member base. And it quickly became obvious to us that our members wanted us to also handle their taxes for them. We would be able to focus on tax advantages very, very easily and use the tax advantage accounts. But when it came to things like solopreneurs that we were just talking about, I would need a licensed tax expert who knows that person's tax returns and their income for that year to tell us how much we can contribute, for example, to their employer portion of their solo 401k. I could open it up for them, I could put the money in, but I needed to coordinate with them. And what was funny is like, at first I thought, hey, I would just deal with your CPA or your tax person. But getting responses from tax people that are more proactive is usually very, very difficult. And I found myself often correcting them on the tax side as much as possible. And both from just like a clear push from our members and for another opportunity for us, we decided that we wanted to provide what we call our proactive tax management services. So we can look proactively for different tax advantages to help our members with. And that's been really resonate. We've had great attach rates on that aspect of the service. And there are a lot of great And we have an expert of tax partners that we partner with that we've vetted in order to help us answer these questions for our members.
Oh, excellent. All right. So talking about the feedback, what are you seeing coming back from your members
On the tax side specifically or
or
overall?
in general?
Yeah. We've gotten like resounding positive feedback from our members in general. The best way that we see that is through referrals. And so all of our business up until this point has been generated because we started with a core group of people who knew me, and they've referred to their friends and they've referred to their friends. And until recently, we weren't SEC registered, and so we were registered by all the individual states. And we weren't able to compensate for these referrals. So these are all uncompensated referrals just based on Pfeiffer love. And we really love these that people are so happy that they're sharing their financial advisor and their tax advisor. The other thing that we see is just like we don't meet with our members all the time. We have our sort of initial onboarding meeting, and then we have our ongoing chat. And so that's usually just a load off someone's back when they have a question, a job change, and they're selecting their new benefits. They just paste it in the chat. We'll respond, and we'll get a lot of emojis back and forth. And so that usually keeps us going as well, just to have fun with it and be able to be like a personal finance best friend and guardian angel in your pocket.
Absolutely. So that's where you are currently. Tell me about where you see this going. Where do you want to drive this platform in the future?
Yeah, absolutely. The next thing that we're super excited about from a tech perspective is on the AI chat assistant side. And so I know that AI is a buzzword that gets thrown a lot in every industry. And I've definitely seen that from my position as an investor before working at Pfeiffer, before building Pfeiffer. But I don't know if you've really played around with the large language models for getting financial advice. They're
They're pretty
good.
terrible.
Well,
Like, they make so many fundamental errors. This is on the heels of that Google paper that showed that they don't like to do hard things, and my own personal experience of having to argue with Claude to do its damn job. Hey, do this. Okay, did you do it? Well, I did about 75% of it. Okay, can you do the other 25% of it? Did you do it? No, I did about another 10%. Like, you have to badger it to give me right advice. Anyway, don't get me wrong. Remarkable technology, but even the numbers of finance it's having trouble with, no, let alone the humanity aspects of it, which it will struggle with.
I agree with you totally. Amazing technology. I was going to say they're good, but they have some major limitations. And so I was just being a little bit more charitable in how I was couching it. And the way that we think about it, some of the primary reasons they're not that good yet and they're not a replacement is because one, the LLMs don't have any pre-existing context on your finances. Two, they are reactive and responsive only to the questions and the information that you provide. Three, they don't have a coherent underlying investment thesis or strategy. I've noticed this like in the LLMs now, they can be very suggestible too, and sometimes over optimistic about bad financial decisions. And four, they're not backed by or checked by any human experts in any way. And also, they don't do anything for you besides give you advice. And so we look at these things in addition to the humanity aspect of it as well, where you can't fully replace this with a robotic solution. However, there are a lot of things that we think that AI can block and tackle for you, especially on the repetitive questions that people ask, that is based on this mountain of data and resources that we've created for people who ask questions at Pfeiffer. So just as an example, one thing that I've done is anytime 10 people ask the same question, I'll create an asynchronous Loom video answering that question. And it'll be in my voice. And a lot of questions come up over and over again. And so
Mhm.
what we want to do is, because this is people's money, we're not using AI to have some trading algorithm that, will go off and do its thing. We want to implement technology, and AI technology is no exception, where it can safely be extremely useful for automating things that we know that we have to automate in order to make this more efficient for people. As its effectiveness improves, we will let it do it more and more and with less and less human oversight.
Fair enough. So before we wrap up, I have three questions I'd like to ask everybody. First one is, if you had one wish for something to change in your company or the industry as a whole, what would it be?
Yeah, absolutely. So what I would change and what we're trying to change about the industry is trying to make it much more transparent and all about client outcomes. We've had a lot of members at Pfeiffer come to us from previous more traditional financial advisors. And one of the interesting things is that when I ask them, how much were you paying for your old advisor? The most common answer that I got by far was, I don't know. And then we would receive the asset transfers from the previous companies, and the vast majority of their portfolio would many times be an extremely high expense ratio, mutual funds and ETFs. And of course, when I asked the client if whether they knew this, they had no idea. And that honestly just pisses me off. Since in my view, personal finance, especially for our ideal customer profile, for young people who have long-term investment horizons. Personal finance and investing should be incredibly simple, but I feel like some advisors may complicate it for their own benefit. And I just think technology
Well, I think it's all various things. There's a good study that showed that basically misguided beliefs of financial advisors that show that they make the same mistakes for themselves that they do for others. So it's not malicious so much as
yeah,
sometimes it's insecurity. Sometimes it's like they don't have a value proposition beyond selling something. And as for complexity, there's an overpropensity for those who feel insecure to basically overly complicate the discussion they're having with the client in order to make themselves seem smart or complicated.
right.
I hear you. Although that being said, there's also a dichotomy of you need to appreciate the fact that this is not simple, right? Pick up the US tax code and tell me who designed this on purpose? No one. A mess. It's an abject mess. So it's not surprising. So I hear you. Second question. What's been the biggest challenge in a company to where it is today?
Yeah. So one of the biggest challenges for the company was navigating the regulatory landscape as a fintech subscription-based startup in an industry that always worked a certain way. As I mentioned before, we started off in Tennessee with one regulator with no clients. And then we started getting clients from all across the country. So we started having to be registered and being regulated by many different states at the same time. And we'd spend a lot of time over email and over the phone explaining how we monetize without charging fees and why this sort of subscription-based approach is actually, for our members, is more helpful to them. And so that's been a challenge for us. But luckily, as I mentioned before, we qualified for SEC registration, which simplifies things because now we only have one parent to answer to.
Excellent. And then the last question I have for you is, what excites you the most about what it is you're working on and gets you out of bed to keep on fighting the good fight?
Yeah, absolutely. For me, it's a combination for my love of technology as a way to improve people's lives, and then just the passion that I have for this particular challenge of helping people achieve financial freedom. So many members, when they come to Pfeiffer, they tell me that they've been living with a level of stress about their finances for years. And I get that because when I graduated from college, I also had a lot of stress about my finances and getting out of that $250,000 of debt. And so I just love the feeling at the end of our first onboarding call, usually, where you just see that weight lifted off of their shoulders. And then on the technology piece, I've never been more excited about the potential of technology, automation, and AI to fundamentally change the industry for better client outcomes.
All right. Thank you so much for your time. Very much appreciated.
Thank you, Jason.
So that was Daniel Alfi of Pfeiffer. If you enjoyed that and are interested in basically looking into a robo for a high net worth or tech focused solution, please take a look because it comes with much more than just investing. As always, if you enjoyed this podcast, please review on Apple Podcasts, SoundCloud, Spotify, or visit your podcast. Until next time, take care.
This podcast was brought to you by Woodgate Financial, an award-winning financial planning firm catering to high net worth individuals and their families. To learn more, go to woodgate.com. You can subscribe to this podcast on iTunes, Stitcher, and Google Play, or find more episodes at jasonpereira.ca.